Let's chat a little bit more about the banking prospects. Prasanth Prabhakaran is on the show with us. Prasanth, hi, afternoon. What is it that you made of this renewed vigor across PSBs especially, and that in the backdrop of what BOB has delivered? Do you think any others could also replicate the same kind of performance?
So after a long time, actually, we have brought back the focus back on PSBs. Not just are they cheap for the right reasons, obviously, because the last 3 or 4 years they have gone through a terrifically bad time when they were forced to declare most of their assets as NPAs over a period of time. But now it looks like the tide is turning. 2 or 3 main reasons for that. After a long time, practically after 2014, the credit cycle seems to have turned positive for the last 2 quarters, Q4 and Q1 of which has gone by, and it shows that signs of things to come. So in the PSU space, obviously apart from the corporate banks, the last time we also spoke, we said that we feel that the corporate banks have bottomed out. But in the PSB space, after a long time, we have a couple of stocks which we believe are retail focused and will end up having a story which will pan out to be totally different. One of them is actually Vijaya Bank, in the mid-sized PSU bank space that have been there. Apart from that, one which is a high-risk trade is BOI, and the reasons for that are totally different. Vijaya, because their spread has been beautiful, their gross NPAs are in the 6% odd range, and the net NPAs are in the 4-4.5% range, and their retail book size is approximately 49% of the retail base. We believe it's a very strong play that will be there for the future. Their CASA ratios are also attractive at around 28-29, and it shows a lot of upwind that can be there. Another key feature which PSBs have actually helped out with is the fact that with government focusing on rural areas, the reach that PSBs had and the faith that rural population has in government banks will show higher CASA balances as compared to a private bank that is there. So it is an area we should look at seriously. We should start looking at building our books in the smaller mid-cap names which have done well. Even the larger ones like the SBIs we are bullish on because the cycle seems to have turned. After a long time we are bullish on this space.
Have been, and after quite some time you have been bullish on PSU banking space, Prashant. But what is so different this time and last time? We are now hearing about RBI coming with new list of organizations where there is issue related to debt. What is the assurance that PSBs won't have same kind of process which it has gone through related to NPA cycles in last 4-5 quarters, and time and again we have seen that they clean up their books and state that everything is been factored in, and then comes the new list. At the same time, we are also seeing that a lot of NBFCs are foraying into the market of PSBs or banking space, lending space. Don't you think so? Though the NPA issue may or may not have been resolved, from where would the growth come with number of participants increasing to lend the money in this economy?
So that's one crucial portion that you have got to understand for NBFCs as compared to PSU banks is that NBFCs, large portion of the borrowing that they have comes from the same PSBs and private banks who lend to them at lower rates, and they are able to maintain NIMs and circulate it in the market. One clear thought that has come about when we interact with a lot of PSU banks is the fact that their lending, which was available at anywhere between 8.5, 8.6, has been up by at least 50 basis points for all of these NBFCs that is there. So as I said that we are bullish on the PSU bank space, we also end up saying that we are slightly bearish on the mid-sized NBFCs that have cropped up over a period of time because their cost of borrowing is going to keep on going up. Very recently, after nearly 4 or 5 years, I saw a mid-sized NBFC actually coming out with an NCD issue where they are raising funds in the range of around 9.5% and the cumulative option is 9.85, which is very high as compared to what they would have got from the PSU banking space, which means that PSU banks have tightened the screws. And the area that PSU banks are looking at to focus on is retail, which is exactly the forte that NBFCs have built when PSUs had stopped lending. Now, both the companies that I talked about, be it Vijaya or be it BOI, both have received money for recapitalization, and their only primary focus area is retail. Retail for Vijaya has grown in the range of around 30 to 35% for the last year. Your BOI corporate book is only 45%. The rest is a mixture of agri, MSME and retail portion put together. So there is a clear portion, there is a clear focus, and the fact that there is a clear thought process of clearing off and getting good management to run the PSU banks in the long run. That message has gone down very strongly in the PSU space, and if that is a way for things to come, please understand they are available at valuations which are pathetic. Vijaya is available at around 0.9% book. You're talking about, though it's the wrong way to look at it at this point of time, what I'm trying to say is that they are available so cheap that if their performance, the way BOI, Bank of Baroda came about with the fact that they are bottomed out, their NPAs are reducing, and there is growth that is coming, it will end up giving you a return that you wouldn't see from your regular private sector banks or NBFCs for the next couple of years.
Right, fair point.
It will not be a great quarter for Tech Mahindra. We are expecting a very subdued quarter from Tech Mahindra. Revenues will decline by 1.3%, largely because telecom side of the business is expected to not do well. Comviva, it's a seasonally a weak quarter, so that will play out. For enterprise also, we are expecting a soft kind of quarter, so that's what will be reflected on the top line. There will also be a hit because of the cross currency movement. So the top line is expected to come at $1.28 million. That's what we are expecting, lower than the previous quarter. Margins will also take a hit. We are expecting a margin decline of 150 basis point, largely because of the salary hikes and the visa cost that they will have to incur in this quarter. There will be some help coming because of the rupee depreciation, but that will not be enough. We are expecting margins to come at 16%, and that will be a cause of worry because analysts have been worried about their margins. That's something that we need to keep a close eye on. Management commentary on that front will be very, very important. As far as net profit is concerned, we are expecting a 25% drop, largely because there was a forex income of $27 million in the previous quarter, while in this quarter we are only expecting $7 million worth of forex gain. So that will reflect on the bottom line, but we need to watch out for the management commentary on margin outlook, how the deal wins are happening as far as enterprise side of the business is concerned, how the telecom side of the business, whether there is a likelihood of demand picking up, especially when we are moving towards the 5G technology. So these are the factors you need to keep an eye on, but for now the quarter will be very, very subdued for Tech Mahindra.
Thanks very much for that, Sunita. Let me go across to my colleague Vivek Iyer who joins in with a quick perspective on what dealers are recommending into the last 15 minutes of the session. Vivek?
Well, what a historic rally it's been, and most of the dealing rooms are quite upbeat given the fact that some of the stocks that weren't moving so far, especially if we're talking about some of the select private banks and PSU banks, that were beaten down quite heavily so far. So dealers are now putting their eyesight as far as the PSU banking space is concerned. Bank of Baroda post the stellar results have seen a very good run up, but dealers believe that buying this particular stock on any dip would lead to handsome profits in a short span of time. The other one, of course, to watch out for, tire stocks within the tire space. Balkrishna Industries is something that a lot of dealers believe that the majority of selling that was seen in the counter is now over, and they believe that the stock is now poised for a strong up move. And lastly, Bharat Electronics, both BL and BML are doing quite well in the session today. Dealers are buying this particular stock on the back of the fact that F&O trends are extremely supportive as far as the screen reading is concerned.
Okay, thanks Vivek for that. Prasanth, just before Vivek started talking about dealers' perspective in the markets, Sunita highlighted what one would expect from Tech Mahindra's earnings. How are you reviewing the IT basket in the wake of the numbers reported for Q1?
So our preference has always been actually to the mid-sized IT names, which was Persistent and KPIT. I have spoken about it the last couple of times that I've come about, and that remains the focus area because we like product centric and we like long-term plays. Both of these are product centric companies, one focusing on the BFSI space, and we are very confident. As far as the larger names are concerned, You have got to understand that the last quarter will be a profitable quarter also because of treasury gains that most of these have seen. And if you look at the growth in your regular businesses, it is in the range of around 2 to 3% for most of the larger IT names. I think so growth as well as returns can be larger in the mid-sized IT names, and that is what we are focusing on.
Okay. But even so, do you think that the perception in the market has changed for underperformers like IT and pharma? Or is it really the news is so good that it's become compelling to look at these names?
So you've got to understand the high performing names, which were your Marutis and the ones that were expected to do well, which was the auto space, unfortunately has disappointed because of the input cost, pressure costs that were there. So what the market will traditionally end up looking at is look for stocks which are giving good results, and that is exactly what the market has taken up, be it an ITC, be it an ICICI, where you have positive news coming in and the stocks are available cheap. You will have rallies which will continue, and that is what the rally has been all about. Your Dr. Reddy's, which has brought about good results, your ITC, RIL continues to be a bagger in that space. So anything that is priced reasonably and your results also come out to be good, markets will end up rewarding it and take their valuations to a level which will be at least at par with the performers that have been traditionally there.
What is happening in telecom space? Now we have discussed time and again that how RGO aggressive plans are ensuring that incumbents like Bharti and Idea keeps bleeding. But then, do you see any ray of hope going forward? Because now we are talking about ARPUs for Reliance Jio stabilizing around this 130, 150 odd mark. We are also listening from a lot of experts that probably the price war is about to end as RGO is trying to reach a particular subscriber and it itself would want to have that price war. We are seeing some traction in Bharti and Idea. So my question to you is, if someone has to take a contra bet and if someone has a time horizon of 2 to 3 years and not just 1 year, do you see any fundamental reason to take exposure from investment perspective in Bharti and Idea?
So I'll answer the question slightly differently, Siddharth. If you end up looking at the investments Jio has put in, which is 2 lakh crores into the telecom space, even if I take a return on equity that I expect to the tune of around 13-14%, you're talking about not less than 24,000 to 24 to 26,000 crores of bottom line that is expected only from the vertical that they have invested money in. And at the present level, at around a 28-30% market share that they hold at this point of time, they are not going to be reaching there very quickly. So the aggressiveness that we anticipate this telecom industry to have pricing pressures will continue, and it is not going to be easy to survive in the market. Traditionally, when you look at global spaces, you have one large dominant player in every market, and then the balance maybe 20-25% being garnered up by around 4 or 5 players. We still are away off that large market share that we are talking about. Till that point of time, my belief remains that it is an avoid. You have to stick to, you still have other sectors which are underpriced and there are showing signs of bottoming out. It would be better to put your eggs into that basket rather than look at this, where I assume that the pressures to end up garnering market share will end up gathering pace over the next couple of years.
So still, competition is not yet over, and you might see aggressive pricing from new players, and probably incumbents have to reciprocate that by reducing their margins.